Hey Shane, how's it going?
It's going all right, man. How are you doing today?
Doing well. It's been a little bit since you and I chatted. We had the holiday weekend, so kind of missed a little bit of communication, but a lot's happened since then on the headlines. What are you kind of paying attention to, or anything catch your eye while you're out there?
Yeah, honestly, because I spent like 40 hours in a car, I noticed gas prices and they dropped hard while we were away. I think when we were, I don't remember exactly what the prices are, but it felt like across the board I was paying about 20% less for gasoline on the way home than I was on the way up to Michigan. So um, gas is it felt pretty good. I think when we left, we were paying close to $5 a gallon here in Florida. And yesterday, when I returned to the car we rented, I passed a gas station that said 427. Um, so I mean, 70 cents on $5. I guess that's not quite 20% here, but there were other places. North Georgia was the cheapest gas. Tennessee was like second cheapest, and then as you went from Kentucky, Ohio to Michigan, it got back to a little bit, I think, more expensive even than Florida, all the way up in Michigan. So I found that interesting. Usually things are expensive in Florida because there's no truck routes that go through Florida. Like you kind of have to you have to come down to, like, especially in South Florida. I bet you gas prices are way more expensive down towards Miami because you've got to drive a truck full of gasoline, from somewhere else, probably Texas, whatever, and then it's not like you can pick something up, like there's no, like, you're not just passing through Florida. You got to drive all the way back out of Florida with an empty truck.
Right.
And so it's expensive to get stuff into Florida, just because of the geographic shape and location of it. So I guess Michigan isn't totally different, given that it's like another peninsula. I went from one peninsula to another peninsula. So uh, so yeah, I don't know. I thought it was interesting that gas was cheaper, or was more expensive though, in Michigan than it was in Florida. That actually surprised me a little bit. Um, but anyway, that's the one thing I've been paying attention to, which I mean obviously translates to a drop in oil, which we've seen over the past couple of weeks.
Yeah, and
So
it's interesting. So today, it's July 7th that we're recording this, and oil has taken a massive bounce. So I found that interesting. Some inventory report came in. I'm no oil expert, but it's a pretty hard bounce. We'll certainly look at that. But I've been wondering just with commodities right now, and we'll pull it up here and compare it to the SPY, but a lot of these commodities have been selling off pretty hard. And I'm wondering if that's a forward indicator that inflation's not as bad as we think, or that it's going away. And if that's going to help us, I'm not one to predict that stuff, but I do find it pretty interesting that most all commodities right now are kind of getting hit over the head.
yeah, I mean, I don't know. I don't inflation going away, I think is there's no chance. Has it peaked? Probably. I've been saying that for a couple of months now. So I was wrong on a CPI basis, because the CPI came out a little bit higher at 8.6, the most recent report. So it bounced back up a little bit, but that's not so much higher than the prior high of 8.5% for CPI. So I kind of, I mean, I kind of think on a rate of change basis, yeah, we're seeing disinflation. We're not seeing deflation. Prices aren't falling. They're just
Right.
not increasing by as fast a pace as they have been. Um, but inflation's not going to go away, not for a while, and we'll see if the Fed has the resolve to stick with their program, or if they start, talking about easing or not being so hawkish or not hiking as fast. That, I think all that just will serve to reaccelerate the inflation problem. So I have a feeling, the 2% inflation target is years away. I don't think we're going to see it for years. I bet you inflation will
Hmm.
stay high for a long time. Um, and rate of change is mostly, what we tend to focus on, but inflation staying at, I mean, if inflation was 6%, people would be happy right now, and 6% is literally 3 times higher than what the Fed's stated target of 2% is. So
Right.
um, they got a long ways to go, And we're not even at, the rise in interest rates that we've seen from the Fed hasn't even really impacted inflation yet. The only reason inflation is falling, not falling, but, not increasing as fast is due to base effects. It has nothing to do with the Fed raising rates yet. They're not anywhere near a high enough rate that their actions are actually inflicting any type of reduction in inflation. So I don't know. We'll see if it's just a breather or a pause before inflation reaccelerates. But make no mistake, the Fed is still quite accommodative, and any company that can't survive and thrive with interest rates at 2% or even 3% on the 10-year, I don't know if they deserve to exist.
Mhm.
If you can't borrow money at 3% and make more than that, pay the loan back, but do you really deserve to be in existence? I don't know. I really don't think so. I think that's ridiculous. So
Right.
yeah, I don't
Well,
know, man. I think inflation's going to stay very high for a long time, and that's going to hurt the small guys, the lowest income folks the most, and it's unfortunate.
yeah. Well, when we talk about all that, how it translates to stocks, so I've got the SPY up, and it has been a little bit since you and I talked, and kind of what we're thinking and feeling. I'll go out on a limb and say it. I'm only looking at entering longs right here. I think that we've got, here's this bottom here where it hit the level that we had talked about before. I think that was the pre-COVID high. And then we had a higher low. I'm not saying that this is the end of the sell-off or anything, but certainly don't want to be entering shorts here. I'd like to see the market, I think it could come up maybe into this range, 420, 422, and maybe it rolls from there. I don't know, but I think right now, just on a short-term basis, we're just seeing that it favors the bulls more than the bears here. What are your thoughts?
I mean, depending on your time frame, I don't think there's enough upside in a long trade here. I wouldn't, I mean, I'm not long, I'm certainly not long the SPY. No, thank you. I wouldn't buy it here either. Still below the 50-day moving average, which I think you have as the orange line there. I would
Yep.
guess. I don't know. So yeah, I mean, just keeps making lower highs. I don't see any reason for it to get over 400 here. So that doesn't seem like enough upside for me to be taking a long position
Yeah.
in the SPY. So I wouldn't touch it. I'm not shorting it here either. I wait for a signal before selling it. But yeah, I'm not short the SPY. I'm not short the Qs. I'm long cash. I got lots of cash. Looking for some energy names that have sold off and dipped to get long. But the SPY is like in no man's land. I think it can easily drop another 10, maybe even 20%. I don't think the market has seen its lows for the year yet.
Right.
The only way I think the market's seen its lows for the year is if you get the Fed coming out and saying, hey, we're gonna slow our rate hike expectations. We're not going to hike rates as many times as we said we were, and we're maybe not going to unwind the balance sheet as fast as we said we were. And I don't see them doing that yet. I see them doing that if the market were to drop another 20 or 30% from here, but I don't see them doing it right now today, because every time they come out and say something, they're talking about how strong the consumer is and how strong the economy is, which is ridiculous.
Yeah.
I saw a comic earlier today that said the consumer is in great shape, and another guy's whispering to his friend. He says, "Yeah, for somebody who's just been in a train wreck." So the consumer is in great shape compared to, I guess, COVID. Shutting down
Yeah.
the entire global economy, and even if you wanted to spend money, there was no place to go spend it at because every business was closed in fear and forcing you to get a mask or show a vax card in order to get into their business. So I mean, at least you can go spend money if you have some now. That's cool. But I don't see anything that's in good shape at all. I see
Yeah.
a downtrend there. I see consistently lower highs and lower lows, and no real reason to get aggressively bullish from a fundamental perspective either. I mean,
Right.
Well, if you got long here, you're getting long right into earnings season, which starts on July 14th. With JP Morgan reporting and some other banks. So you've got 7 days from now before we start getting probably a whole bunch of reductions in expectations for future earnings. On the 28th of July, you're going to get the first estimate of GDP for the second quarter, which as of, I guess, I got an email at 11:41 a.m. Eastern time. On July 7th, the Atlanta Fed GDP Now model estimate for real GDP growth in the second quarter is a decline of 1.9%, which is worse than the prior quarter decline of 1.6%, if I remember right.
Yep.
So yeah, I don't know. Fed tightening into a slowing GDP, slowing inflation is a recipe for absolute disaster. All the companies are firing people and freezing hiring. I don't know, man. I can't even there's not even a technical reason to get bullish in my opinion, and there certainly aren't any fundamental reasons to get bullish. So I am not long in the SPY.
Yeah. And for me, and I had traded a little bit long right down in here. And that was going, it's a tradable bottom. So what that means, that doesn't mean it's the bottom, but it needs to come up here. If it comes up here, I'm going to be all over this thing on the short side. But down here, we've built a nice little base and it just needs to come up, let people get their hopes back up, and then just, roll it back over and start scaring some people out of their positions.
Yeah, we will see. I'm not optimistic there.
Yeah. And then I wanted to pull up a comparison here. Let me make sure I got this right here. Oh, is it on the plus sign to compare?
I think so, yeah.
Yeah, there we go. So I was just looking at copper and you're seeing some headlines on this, but so this gold line, that's copper versus the S&P, and I'm going to go out quite a bit, but you can see a lot of these sell-offs, copper will kind of correlate with it. But the biggest one, if you look at this, here's where we came out of COVID. Copper ran up with it, went flat, and it's rolling over pretty hard, but it's also kind of in line with the S&P. So I don't know if maybe that's already factored in, and it's hard to just look at one thing and say that's the indicator, but a lot of talking heads are saying that with big sell-off in copper, that's usually a leading indicator for a recession.
Yeah, they call copper the doctor. I don't know if those historical correlations will hold into the future, and in a rising interest rate environment, I'm not sure how that changes historical correlations, because a lot of the correlation studies that you see today have been done since 1981, when interest rates peaked and started falling consistently since then. And so now we're in a little bit of a different regime at the moment. And if that holds, I'm not sure if the historical correlations will hold true like they have in the past. So yeah, I don't, but yeah, meaning the media, the financial media, the talking heads, they call copper the doctor, Dr. Copper. And so whatever copper does, they say the market will do. And if copper is leading the S&P 500, then there's another big drop coming for the S&P 500, which is in perfect alignment with what I expect. I expect at least to drop down to that pre-COVID high, if not more. So
right.
So yeah, I maybe that works. Maybe it doesn't, but certainly the commodity complex is getting smacked around a little bit. So I wouldn't want to be long copper from a couple of weeks ago. You'd be losing a lot of money.
Absolutely. So, well, let's go ahead and just roll through some of our indexes you always look at, and I'll take copper off here. Oh. So Qs, same story as the S&P. Let me get in here. There we go. Yeah, so the Qs kind of down near that same level coming up. Nothing really to report here. Do you have any comments?
Nope, it looks the similar, just larger magnitude as the SPY. So if interest rates climb and the dollar climbs, these guys are going to go down further. all the big tech companies are slowing hiring as well. I shouldn't say all, many though. Microsoft, Facebook. I'm not sure what Apple's up to. There's a couple of like Google still looks like it's like pretty cheap, compared to its history. So some of them look okay, but I'm not a big trader of the indexes. I think, we use them just to measure certain things. And I short them sometimes. I very rarely long the indexes because usually if the index is going to go up there, I'm just going to go pick some stocks inside of it that are going to do better,
Right.
or I think will do better.
And
So I don't trade the indexes too much. I certainly don't trade futures ever, and
yeah,
so I do it a little differently than you. But yeah, same idea. Just if you could right click the price axis and make it auto, like yeah, right click that and do to auto fits data to screen.
there we go.
There you go. And so I mean, it's the same. It's just a series for the most part of lower highs. Even when it kind of goes up and makes a new high, it's rolled over this year. It was actually, there's another stat this morning. The S&P 500 is trying to post its first 4-day win streak since March 24th through 29th. And we haven't seen a 5-day win streak yet in 2022. So yeah, we'll see what happens. Day after or the week after a holiday sometimes is a good time to be buying stocks, at least for a short-term pop. So maybe we'll get our first 5-day win streak in for the SPY. And I think for Q's had one. No, they had one 4-day, no 5 days though. So anyway, yeah, I just the same. I think this can easily roll back over and go and make a new low for the year. I don't see any fundamental reason to be aggressively going long technology stocks. Or any other stock really right now. Energy is interesting because I think energy will probably, like, I think oil will stay high. Like as long as it stays over 80, 90, $100 a barrel, the oil companies are going to make lots of money. So I think the oil patch is, it's sold off a bit. A lot of those companies dropped 30% from their highs in the past couple of weeks. So I mean, if oil is going to stay expensive and the oil producers have sold off a bit, it could be a good dip to buy. Occidental Petroleum, if you want to type in OXY real quick, it's one of the best performing large caps of the year so far. In fact, on my screen of large cap leaders, I only had 2 stocks on it, and these are stocks that are up 50% or more in any of the past 1, 3, or 6 months. Can you I don't know, there's a lot of empty space there on the right hand side.
Yep.
But this thing's up, a fair amount for the 6-month period. It has pulled back a fair amount from the highs, and looks like it might want to start climbing again. So these are the leaders of the stock market right now. I'm not into picking bottoms, so I don't want to go buy the things that have sold off the most. I want to buy the things that are showing relative strength in a bear market. And so Occidental Petroleum is an interesting one. Could easily make a new high if oil stays relatively high. Oil doesn't need to keep going up. It just needs to not crash to $50 a barrel. And these guys are going to make plenty of money. And that's the name of the game. You want to own companies that are profitable and growing revenue and growing earnings. So anyway, this is an interesting stock, I think, to take a look at here. How far has that pulled back from the high? How far is like from the recent high to the recent low? How far was that drop?
So right now we're sitting down 23%, but it did go all the way as far as about 26%.
So some volatility out there in stocks like this, which means, if you buy it here and set a low or set a stop pretty tight, if it recovers and goes back to its high, you can make 20% pretty quick.
Absolutely.
So I like the leaders. The only other one that was on my large cap leader list, there was only one other. Which one was it? I think it was maybe SQM, which is a lithium company. So is that right? Let me just look. Oh, there's a couple more on there now. Yeah,
Well,
SQM was on the list too, and that one is looking pretty interesting. It's pulled back Gosh, from 115, it pulled all the way back 30% from there down to about 80, and now is ramping higher. So SQM is on the list of things to consider on the long side for my personal trading account anyway.
Absolutely. And that's one of those things. The leaders from this in the last 11 years, they might not be the leaders coming out of this. So when you're seeing a bear market and you've got names like this that are trending higher, that is not only a good name for today, but perhaps when we switch to bull market mode, this thing really could take off and be the leader in the future. But yeah, I love charts that just trend up, makes it easy.
Yep, it's the opposite of the SPY, right? You see higher lows and higher highs, so
Yep.
that's what you want to look for. If the SPY looked like this, I'd be all about going long it, but it doesn't. So we'll see how long that lasts. But I really just think the Fed is in the driver's seat on that, and as long as they stay hawkish, I just, it's not that the market can't put in a bottom with the Fed, raising rates and unwinding their balance sheet. Anything can happen. It's, idea. You would assume that the market will put in a bottom in anticipation of the Fed backing off their hike cycle. So you have to pay attention to what they say and what their language is and what the minutes come out and say. If they start indicating that they might slow down the pace of rate hikes, the market will put in a bottom before they actually stop hiking rates. So I'm not saying that you have to wait all the way until the Fed stops hiking in order to buy stocks. That's not what I'm saying at all. But right now they appear to be sticking to the hawkish rhetoric, and they're not really signaling through language or anything else that they're gonna back off at all. So I just, as long as that's what they're gonna do, I just don't see any reason to get crazy on the long side. So
Absolutely.
that's what I'm waiting for, is a change in their tune.
So nice. Well, then, coming off of that, let's look at oil. So we drew this before, the support line, right? I think is at 95. That also lines up with the 200-day, but I mean, oil was just getting killed. And then we got this huge bounce today. And again, I'm not an oil expert, but it's up almost 6% today. So,
yeah,
personally, I'm looking at a day like today where maybe tomorrow it pulls back a bit and then I want to go long. I'll zoom in, but kind of right off the top of this candle right before it, right in there. If we get a pull back into there, I'd love that thing long. I think there's a great case for oil to go higher. And then the chart just kind of has mostly the chart, again, I'm not an expert, but when you're on a major support level and an uptrend, usually a good point to pick a little up.
Yeah, buying around there for, going back to March would have worked each time. So, yeah, I still see lower highs from the high in June for now. So in the short term, I think it's still kind of trending lower. Wouldn't surprise me to see it consolidate around here before making a meaningful run higher, but I don't really trade the oil specifically. So your guess is as good as mine. But yeah, today was a big recovery day. I think a lot of people have that same line drawn on their chart. So when it got down to around 95 a barrel, you saw some buying interest there. So that's no surprise. Now I think it'll be just a time to see who are there more of? Are there more buyers at 95, or are there more sellers at 100?
Yeah.
And it might take a few days for it to play out there, but yeah, I don't know. There's a lot of things that work in the oil market. Typically a stronger dollar and higher interest rates are going to reduce the price of oil. That hasn't been the case given the geopolitical instability of Russia and Ukraine, and I guess the wokeness of countries trying to penalize Russians across the board through oil sanctions. I don't understand why people do that. I mean, I don't know. It's kind of strange to me the way that it works. You didn't see the globe boycotting the United States of America, because we put people in Guantanamo Bay without trial for 20 years. So, I don't know what is different, other than the commies have a bad rap, and rightly so. I wouldn't want to live in a communist nation at all. So, I guess it's very weird to me, that monetary policy in the United States should be sending this lower, and it just doesn't seem to be going materially lower,
Yeah,
holding up here is, it's interesting, man. And with, and you read the news too, and you got like, apparently there's like eight different new versions of COVID out now, and people are still trying to make a deal out of COVID being a thing. I don't know anybody who still cares about COVID. I've seen a couple people wearing masks recently, like in my travels, which I don't understand why that is. Um, yeah, it's all
it,
just weird to me, man. But as people go on cruises and get on airplanes and drive cars like I did across the country, certainly there's more demand for oil and gas than there was when the entire global economy was locked down. And now there's less oil and gas available due to sanctions on Russia. So that dynamic is, to me, I don't have any edge on that. It's like flipping a coin,
yeah.
I don't know what's going to happen with it. And so
And
tend to stay away.
I had to laugh. I was trying to find it and I'll see if I can't find a link to it. But on Twitter, there were two headlines. So I think JP Morgan came out and had some price target like $300 a barrel. And
Yeah.
then somebody else came out and they had 65 a barrel. And it
Big
just
spread.
really shows you how much, I mean, you're just flowing or flipping coins. It's trending up right now, but I don't know. I mean, there's a point. I know my wife, we were talking about, is it time to ride the bus and save on gas because gas is getting so expensive, and get enough people doing that, perhaps that'll bring it down a little bit. But
How much is gas up there in the mountains?
we're over $5. So
Still? What
yes,
was the highest price you saw or had to pay?
I've done, I think 530 or 540.
Wow.
So it gets expensive. But so with all this inflation and everything going on, what's going on with gold, man? This is, I've been a gold bug for quite a while, and this just looks like it's a pet rock and we're going to zero. I mean, this is this is the ugliest chart. I'd never trade this thing. I'm gonna just give up gold for the year and maybe do that as part of my faith or something. So try to
Yep,
stay away from that.
it looks awful. You can hold gold as a long-term chaos hedge, but that's about it. It's not looking too good on the upside in the near term here. So yeah, that's an ugly looking chart. I'd rather short that than long it, but I have no interest in trading the commodity itself.
No. And this is one of those things where, so look at this. Here's RSI under 30. It's sold off like that. This is one where if you want to tell your friends how smart you are and prove that, here's your chart. Couldn't pick a worse chart to try and trade, but if you want to make money, this is not one you want to be trading. And like you said, maybe a chaos hedge, but just one ugly chart.
Yeah, looks like the 50-day is now crossing the 200-day from above too. So that's another technical downside move. I wouldn't be surprised to see a little bit of relief rally here off the the oversold RSI, but
Yep,
I wouldn't expect that to hold up for too long.
absolutely. So now here's the next one. So treasury rates. And as we all know, the higher these go, the higher mortgages go. And I was reading a headline. So we've had the largest pullback in mortgage rates since 2008, which make what you will of that, but it looks like excuse me, came back. We're under the moving average here. We're trying to get back over, and I still think the trend is higher, but it's always hard forecasting rates. They're just kind of slow, and we could just move sideways here for a while too.
Yeah, who knows, man. I think the Fed's trying to get rates to go higher overall throughout the economy. I think as they continue to unwind their balance sheet and step away from purchasing a lot of bonds than where they were when they started this exercise. And so whether that doesn't mean the 10-year needs to go to 4 or 5% in the next couple months, but just staying up here above, at or around 3% is quite a bit higher than it was 6 months ago or 12 months ago. So if you look back if you change to a weekly chart and zoom way out, 10-year rates at 3% are still historically quite low. It's been higher for most of the history of the world. So I
Yeah.
mean, does it need to go back down to 1 or 2 or negative? No. I think we could easily continue much higher from here. I'd love to see rates around 5 or 6 or 7%. Have there be some consequences to actually borrowing money for our government and the zombie companies out there in our economy that that don't really deserve to exist. So I don't think we'll see rates at 6 or 7% anytime soon. I think they'll probably stay under 4 or 5 on the 10-year, at least for a while. But I also think we'll stay above 2 for a while. So I think we're kind of in a range. Should take a while to to kind of work its way back up to 6 or 7%, if that's ultimately the place where we're going. But
Absolutely.
yeah, I don't know. I definitely wouldn't want to be long bonds here, though. That's
Yeah.
I just don't see rates going back under 1%. So I don't know.
Yeah, I think long bonds is not the answer. And something else for people watching, I think it's important to consider is that, as you can see, relatively speaking, rates are pretty dang low. But I think one of the most important things is just simply stability of rates. Not having them be volatile, giving companies the ability to forecast. If we have that in place and rates go a little higher, I don't think that's the end of the world. I think that's just fine. But yeah, if you're investing in bonds, this is just a terrible time. If it was the 80s, great, but now we're not going lower. We're not going negative.
Yeah, no, I
So
don't think so. Not unless they want inflation to go much higher,
yeah.
and they don't. So
Then, and here we are. So Bitcoin, look at this. We're holding our line we drew, and let me get back to a daily chart.
yeah, I think you also need to hit auto on the yeah, you accidentally, I think, clicked that during that. So there you go.
So here we are. We're holding this level. You could have maybe traded bottom. So I bought my first Bitcoin. I went long the Bitcoin futures down here, and I held it for about 15 minutes and decided Bitcoin, it's really hard, the volatility, it just makes for a hard trade. So I stepped away from that one, and hey, maybe when we get a really strong trend, I'll get in there. But right now, my take on this is we're probably just going to do like we did here. So we'll go sideways, maybe we'll go up a little, and down we go. What are your thoughts?
My chart looks a little different than yours, so I might want to just share it real quick. Let me
Yeah,
see if I can do that.
I'll stop sharing and let you share it.
So you should be able to see my screen now.
Yep.
Last time we really talked about it was in this. Well, let me see if I can get my little highlighter on here. So last time we spoke about Bitcoin was in this little wedge, and I said if it fell out of that wedge, we could drop down to this red line here, and we did, and dropped through it. And now that this line here has become resistance, is what I see. Going back to December of 2020, this is now a resistance. So I wouldn't be interested in trading Bitcoin until it got back above that level, and at least not from the long side. If I were to draw, a new wedge here, it's going to look something like this. And it looks like it's trying to break out, but again, this red line, this level here, is going to still act as some pretty major resistance, in my opinion. And looking down here at the momentum, I wonder if I can. There you go. Momentum has been positive during this entire ever since right here.
Yeah.
Momentum has been positive, and it still can't break through the resistance level. So my expectation is that by the time we get back to this red line, it's just going to smack it even lower. And if we break below this here purple line, this upward sloping purple line, effectively making another lower low, I think that we get back to this 13,800 area, which was my original prediction way back here, of an 80% drop in Bitcoin. So right down here is an 80% drop from the highs. That's pretty much what I expect to happen. Doesn't have to, if we break out above this resistance at around 22,000. And certainly if we get back above the 50-day moving average, Bitcoin can shoot up pretty fast. So there's some trades to be had in there if it breaks to the upside a little bit, but I don't know. I think the trend is still down. Well, I know I can see that the trend is still down. And so I'm not real excited about trying to get long it here. I'm also not real excited about trying to get short it here. The time to go short was back here when it was getting rejected by the 200-day moving average. You can
Right.
make a lot of money shorting there. To me, this is just in no man's land. Needs to break one way or the other before I would get excited about trading it either on the long or the short side. But again, I don't expect Bitcoin to go to zero. I think it's more likely that eventually we'll see it at 100,000, in my lifetime, maybe even in the next 5 years, maybe even sooner than that. Because when this thing wants to go up, it can go up real fast. I mean, from here to 524% in 219 days. So that's a good run. Bitcoin is still capable of doing that. But crypto needed some people to get cleaned out, and that has happened. It's still happening. There's lots of fraud being sort of uncovered in that market, and it should take some time for it to truly bottom and start grinding its way higher. So I think there's a ways to go there, and I'm not long or short. I'm just sitting on the sidelines and drawing lines on charts.
Absolutely. And it's kind of funny. I always get asked this, or the S&P is, how do you know the bottom's in? It's a headline or something, right? That's what a lot of people look for. But
yeah, they come and ring a bell and tell you it's at the bottom. That's
sometimes it's as simple as this, those lines that you drew. When we get a close back above those, okay, now it's time to start getting, looking for an entry. But right now, when it's doing this, you just set alerts and let it notify you when it hits a certain level, but otherwise just stay away.
Yeah, this line here is probably the most important one
Yeah.
out of the three that I've drawn there. I think this orange line is back above there. You're above the 50-day moving average. You're still below the 200 for now, but the 200 is going to work its way down to this orange line if Bitcoin stays down here. And so I think this is, we tagged it lots of different times, going all the way back to January of 21, and then again late January, and then here, kind of here. There's a lot going on at that level right there. So everybody who sold, around this level, if it gets back above, they'll say, oh no, and they'll try and chase it a little bit higher, you would think. So I'm just not really doing much with it for now, but watching.
Absolutely, same here. So we'll see what happens. But well, Shane, I don't think I have anything else to cover. Anything on you want to hit, or?
No, I just think we missed the mortgage rate. So this is what we see in mortgage rates right now. It's a big spike. I think it's still heading back towards this 7% or 6.82 overall. So that should really begin to depress home prices a little bit. As rates go up, people are not going to be able to afford the mortgages, the payments on them. And that's what everybody in the mortgage business says. It's not about whether you can afford the house, it's whether or not you can afford the payment.
Yep.
And the higher rates go, the lower the price of the home has to go in order for people to be able to afford those payments. So right now we're in a situation where, everybody who's got their house listed is looking, saying, oh, well, my neighbor sold for this price, or my neighbor sold for that price. I don't want to drop my price. This is what my house is worth. And so they're anchored to those numbers that, were more realistic when rates were a lot lower. And so it just takes time for the housing market, for the real estate agent to get through to that seller and say, look, if you want to sell this house, you're going to have to drop the price. But it's kind of starting to happen. I see it happening, in my neighborhood and in other ways across the country, just from data that we follow. And so that'll be another major driver of CPI inflation. Food is a big component, energy is a big component, but shelter is the biggest component. So so as the house price, as interest rates go up, house prices will come down, and then so will inflation. And I think the big thing that we need to watch for is that as inflation begins to moderate, even though it's high and going to stay high, as inflation begins to sort of grow at a declining rate, if you see the Fed come out and reduce their hawkish rhetoric and start talking about pausing their rate hike cycle and maybe slowing down the pace of their balance sheet reductions, that's what can really put a floor under the market and send it higher. But for right now, I just look at every bounce as a bear market rally. That'll be stopped, and I think we can easily make a new low for the year and all of the major indexes. So markets are in no man's land. I don't see any reason to be aggressively doing anything. Just hold on to your best positions until you stop out. Be cautious about what you add, and kind of wait and see.
Absolutely. So awesome. Well, Shane, it's good to see you again. I know took a little break there, so good to have you back, and I guess we'll see everybody next week.
All right, thanks everyone. See you.
Awesome. See ya.